Hello, everyone. On behalf of the World Affairs Council of Austin, I welcome you all to another collaborative effort with the Kozmetsky Center of Excellence in Global Finance at St. Edward's University. You know, my name's Ben Ramirez. I'm the Vice President with the World Affairs Council, and I want to thank the Center's Director, Dr. Cheryl Cross, for your partnership in these interesting forums. In addition to several members of the community, we also have Professor Mortada Mohammed's International Marketing Group here as well. Today's program on managing geopolitical risk will cover a topic of interest to many business executives in Central Texas. After our guest presentations, we will open up for a roundtable discussion, freewheeling discussion that we used to have as in the BBVA Compass Bank facility, and that will probably take place around 12:40 p.m. Today's discussion is intended to help us all understand the risk management processes and the political risk considerations of global insurance companies. Our guest presenter will provide relevant insights for managing exposure in your respective industries. I'm pleased to introduce our featured speaker, an expert in geopolitical risk analysis, who currently serves, among other impressive organizations, as executive in residence at the Geneva Center for Security Policy. Please join me in welcoming Dr. Beat Habegger. Doctor.
Thank you very much, Ben, for the kind introduction. Welcome to all of you, and thanks a lot for the invitation. It's a great pleasure for me to be here. It's also an honor for me to be here, and I'm very much looking forward to discuss the topic with all of you today. A few words on myself to get started. As Ben has already said, I have worked in the insurance industry for many years, over a decade, with Swiss Re, one of the world's largest reinsurance and insurance groups. And of course, all what I'm going to say is very much inspired and very much based on the professional experiences I have gained over the last 10 years in this organization. But I think that many of the conceptual frameworks and the processes, the approaches that I'm going to introduce will also serve well in dealing with political risk, geopolitical events in other industries, and basically in any other company that is exposed to the geopolitical situation as it presents itself today and tomorrow. Let me just quickly show you what the plan is for today, for my talk of about half an hour, maybe a bit more. I would like to get started with quick, bit more conceptual introduction on how politics and markets are interlinked and how they depend on each other to some extent. Then I dive into the political risk as the concept that we often use to also organize the corporate response to political events. Then the company exposures, quick concept, and then very practical application at the example of the insurance industry. And then, of course, what may be of most interest to many of you is how can the companies actually deal with political risk? So what can they do? And I have put together for you a 5-steps approach that was very beneficial for me when I was dealing with these topics at Swiss Re over the last years. But let me get started first with this slide. The basic premise of this presentation is politics and business are closely interwoven, right? So we all know that firms compete with each other in a specific environment. In a market economy, this environment is called the market. And the market brings together a variety of stakeholders. As you can see here in this inner circle, you have your employees, you have the suppliers, the customers, competitors, etc. But of course, all these market participants and market relations are embedded in a broader social, cultural, and political structure. And the stakeholders in this broader structure, so what is on this slide, the outer circle, are governments, regulators, the media, NGOs, etc. And so firms, of course, do not directly operate in this external circle, but they are affected by the perceptions, by the actions, by the decisions of all those that shape this external environment and this external circle, which basically encircles the market competition that occurs then among the different firms. So what I want to say with this is that markets, of course, do never exist in a vacuum. They do not exist independently of their broader environment. Politics sets the legal and regulatory boundaries within which companies operate. Society also shapes the norms, the values, the cultural practices and habits that also, of course, set boundaries for market action. And business cannot avoid these social and political issues, even though some business leaders sometimes would love to, right? They would like to work independently of government intervention, of society also bringing in their preferences. But of course, this would be an illusion. Most also understand that. Most know that these are the framework conditions that they have to accept. But of course, how to then to tackle it and how to actually make this work is another chapter, and that's the chapter that we're gonna talk about today. Political risk is often the conceptual foundation that we use when we want to structure a bit everything that is happening in this outer circle. We say, well, there are political risks that are created for the market in this outer circle that are then kind of perceived by the firms as a risk event. And so what is actually political risk? So first, of course, we need to understand what is risk. Risk is always something that is occurring in the future. Risk is always something that is uncertain. We do not exactly know how it's going to turn out. And risks is always something that where human beings have a certain ability to influence the course of action and to protect themselves against what's going to happen in the future. So that's a very important element of the risk concept. Then risk is often conceptualized as the likelihood that what is the likelihood that something is going to happen in the future, a future event, a future action, future development, future decision, and the impact of that particular event, if it were occurring, what would it actually mean then for your organization, for yourself, for your business, for a country, for a government, whatever the object of this impact would actually be. And then very simply, the political risk is the likelihood that a politically induced event or decision occurs within a specific time frame, and the expected impact, often the loss, but sometimes also the potential gain that a specific company faces as a result of that event, decision, or action. So now some of you may ask, oh my gosh, this is a very theoretical discussion today. But I think it's not theoretical when you look at what the perception is of business leaders. So I have taken here two graphs, two surveys, perception surveys from the McKinsey Economic Conditions snapshot. And basically what I want to show with this slide is that politics, geopolitical events, trade conflicts, economic volatility, are very much on top of global business leaders' concerns. So this is based on a survey. The survey is run by McKinsey, and it surveys about 1,500 business leaders across the planet. So in all the world regions, and then it's aggregated. You can also find you'll find it on the internet. Of course, at the moment, there are other issues that are a bit more on the top of our minds. That's easy to see here on this slide from the World Economic Forum, published in the Global Risks Report just this month, or last month actually, in January 2022. It shows that climate action, the natural catastrophe issues, the societal issues are a bit more on top of people's minds, but the geopolitical issues are still very much there. And of course, as we all know, perception can change quickly, situations can change quickly, and these geopolitical and geoeconomic risks can resurface anytime. So certainly not something that is gone. It's maybe also in light of the current pandemic has moved a bit into the backward, but it's not over and can resurface anytime. So maybe just to briefly reiterate the main insights regarding this interlinkage of business and politics, I think it's important to understand that rules, regulations, or also social norms govern business interactions. Firms and markets do not exist in a vacuum, and they are embedded in this broader social and political structure, and companies must engage with these external stakeholders also to create and sustain competitive advantage. So the goal is always to think simultaneously about the business in your specific market and the business as embedded in this broader environment. And when you think about these issues simultaneously, I think you are also in the position to build a corporate strategy that provides answers to challenges in both environments and is also then fit for tackling all the future challenges that may occur, be them whether they are driven by the external environment or, of course, the commercial environment in which you compete with your competitors. So let me then move into the second part, and let's now become a bit more concrete, and look at how companies are specifically exposed to political risk. I will do this primarily at the example of the insurance or reinsurance industry, because I know this industry well and have worked in this industry for more than a decade. But I also believe that the conceptual approach can be transferred to any other company and industry. And hopefully then we can discuss this a bit later. We can also give me some feedback, or maybe we can discuss whether the model also needs to be adapted to different industries. So simple exposure model. So basically the easiest way to get started is often to look at the company's balance sheet. So you all know this as business persons. This is a bit the untraditional way of showing a balance sheet, but the idea here is basically we have the assets and the liabilities. An asset, as all of you may certainly know, is anything a company owns and which could be liquidated and turned to cash. So we should always ask ourselves, what goods and resources does the company own? What do we have as assets? And then, of course, also, what does the company owe to its debtors? So all the liabilities that we may have, this may refer to future payments to someone, taxes that we owe to the government, debt payments that we need to pay back in one time in the future, etc., etc. But of course, a company is not only built on assets and liabilities, but also there is also a machinery room, as I often call it. So the company needs something to operate, and so it needs IT, it needs people, it needs maybe an HR department, then it needs buildings, project sites, maybe a legal service, etc. So all the stuff that is needed to keep the machine running, right? And of course, finally, all the companies are affected, at least to some extent, by the economic situation in its respective markets. It's also affected by the overall economic situation of the country, of the broader region, etc. So, and here, of course, then some industries are more vulnerable to the economic cycle. Some are less vulnerable. Some have sell goods and services that people buy independently, basically of whether there is whether the economy is in upswing or downswing. So they always buy the stuff, but some industries are, of course, much more exposed to this volatility. And the goal basically is, with this model in mind, basically to assess the company's exposure against political risks on all these dimensions. And once you do this very systematically, you will find out, you will identify all the vulnerabilities that you have and all the areas where political events could impact your business, and of course then eventually also impact the commercial success of your business endeavor. So let's look at the situation in the insurance industry. So if assuming this were the balance sheet, or basically the overall model of this fictional general insurance company here, an insurance company, as we all know, sells covers against various types of risks to its clients. We all know this. You have car insurance, home insurance, and of course you also have specific insurance types for your business. And in return, the insured pays a premium to the insurance company. And all these underwritten risks, as they are called in the insurance lingo, are liabilities to the insurer. So the insurer knows that sooner or later he will be required to pay the claims that are linked to the insurance cover that someone bought to protect themselves against such future disasters or future events that damage the material value of of all the assets that they have protected them against. Then, of course, the insurance company invests all the received premiums, so all the money that they collected is invested somewhere, and these investments are of course very substantial, because the money needs to sit there until the money is used to pay the claims. So the money will be invested in government bonds, corporate bonds, any other equity investments, etc. Then, of course, as already said, there are operations. You need IT, HR, legal, etc. And of course, you are often, and in insurance and the financial services industry more generally is often very much the case, you are often also part of a regulated industry. And of course, the financial services industry is among the most regulated sectors as such, right? So there is so much regulation. You need to make sure that you comply with all the rules and regulations. Otherwise, you are out of business. And business environment, insurance company, of course, it's not the same for all lines of business, but overall, you could argue that if the economy grows, premium volumes also grow. So there is a clear correlation, depends a bit on the line of business, but it's clear if people have more assets, have more values to buy covers for, then of course also the potential business volume, at least of this general insurance company, is growing. So now we can basically look at all these four sectors here and reflect on political events, political issues that could actually impact these four buckets. I have put some of them up here, but I'm not going to read them all for you, but you can also, maybe it's also then a good, maybe as I said, I'm going to send around the slides, or the slides will be distributed, so you can also have a look for yourself, but you will see that there are examples of what could happen in each of the four quadrants that you see on this slide. But let's quickly look at the different quadrants. When you think about here the underwriting quadrants, the insurance industry offers coverage for any kind of risk, including political risk. So you can insure yourself against at least all the political risks that you see here on this slide. Terrorism, of course, is a very prominent one, but you can also protect yourself against, for example, expropriation when you are an investor investing abroad, or you can also insure yourself against strike action, against rioting and destruction of your buildings, for example. So there is a broad variety of specific political risks against which you can insure yourself. And then, of course, there are political events are often not directly causing a certain risk, but they are also often secondary risk factors, so to speak. So it means that at the end it may look like a credit risk event that you are facing, but of course the reason why this credit risk actually occurred was because of a political decision that was taken by, let's say, a foreign government. So it's not, maybe that the linkage may be a bit more indirect, but nevertheless, of course, it's ultimately when you then trace it back, you will see that the eventual cause of let's say a credit event was linked to a political decision. So here are some political risk related insurance losses from the insurance industry. Well, there are very different ones, right? The Arab Spring events. I remember when I started in Swiss Re in 2011. This was, of course, a major topic at the time when we had all the upheaval throughout the Middle East in many of these countries. And of course, the most prominent one, probably the most prominent political risk event, certainly for all of you to certainly remember very well, at the 20th anniversary last fall, the 9/11 terrorist attacks. I think the 9/11 terrorist attacks changed the perception of political risk forever. It has led to tremendous changes in the insurance industry, especially in the way terrorism is covered by the private sector as well as the government, then of course in conjunction, so to speak. Hijackings, rioting, strikes, bombings, but these are more or less, these events here are quite focused on, let's say, political violence events that are of course very prominent and also very well to understand, because the impact there is immediate. It's not this secondary effect that I have talked about before. Then of course, investment side. All those of you who invest in the financial markets, they know that politics can drive market returns, and politics can drive very much the reaction of market participants. Here are some. This is a graph from the UBS, the Swiss bank, that shows what impact some of these terrorist events over the last 20 years had on financial markets. And of course, for an insurance company, an insurer is always also an asset manager. So this is something that is, of course, still always very important to keep in mind. It's not only the short-term events, of course, it's also a bit the longer-term trends. When you think about central bank policy over the last, since the global financial crisis, how much it has changed the situation in the financial markets, the low yield period for such a long time, and of course this is also politically driven, a politically driven change in the way the investment landscape presents itself for any asset manager, including, of course, the insurance industry. Then thirdly, of course, operating this highly regulated and globally oriented business. As said before, any company is exposed to certain political threats, legal and regulatory risks, IT risks, the sanctions regimes, very important. Also, that's probably also true for many industries. It has become quite a challenge to navigate all these different sanctions regimes, be it the one of your own country, or the country where you are domiciled, be it the ones that other countries may have put up. So I think that's a big concern for many, especially for many globally operating companies. Then, of course, also security risks for your staff, depending on where your people are, where you have project locations, where you may have office buildings. Of course, for an insurance company, usually they are in cities and on the 13th floor of a building in the capital city. So that's usually not so dangerous. But when you are an engineering company trying to operating manufacturing sites somewhere in the Amazon region, or in areas that are a bit more difficult to get to, and also often a bit more challenged also by, let's say, security-wise, unstable situation, then of course this becomes a much bigger concern for your company. And as said, highly regulated, especially after global financial crisis, insurance industry, including the financial services industry, including the insurance companies, banks, of course, were most prominent in the public discussion, but there have also been a lot of changes in the insurance industry with changes to the capital requirements. The solvency regimes have changed fundamentally, and of course also the regulations regarding the expected market behavior has changed. And all of this needs to be adhered to very closely. It also needs to be monitored. People, when you are from a company point of view, need to understand where the situation is going to, what policymakers may do as a next step. You may also try to influence some of these decisions, of course, but nevertheless, at the end, you have to comply with it. Independent of what your preferences are, you have to comply with it, and you need to make sure that everything is working according to the law. Business environment I've already talked about, so I think I can skip this. And then once you understand the landscape, to what extent you could potentially be vulnerable, you can start thinking about what can we do about it. Yeah. So and here I would like to propose 5 steps approach. So 5 key competencies that companies need to build up, or need to source, need to buy from external consultants, external contractors when they decide to do so. Think you need to scan the horizon. You need to imagine a bit the future. You need to understand the exposures. That's what we have already talked about already a little bit. You need then to decide on the response, what you want to do. And of course, you should always be prepared and have the right capabilities in place. So let me quickly run through these 5 steps as well before we then conclude. No worries. I hope I'm not running already out of time. Okay, thanks a lot, Ben, for nodding. So first step, environment analysis. What issues emerge on the horizon, and how do we monitor the risk landscape? I think it's super important that you keep track of what's going on. But of course, you don't necessarily need to keep track of everything that's going on this planet. There is so much happening. It always depends on the markets that you are in. as a globally operating reinsurance company, we had, as Swiss Re, we had to monitor the landscape very comprehensively. But of course, was a bit less. We didn't really look at what's going on in Paraguay or Bangladesh or on a daily basis. Let's put it that way. But of course, if you have a production facility in Bangladesh, you want to have a closer look what's going on there all the time, and you should never forget about the interdependencies that are so remarkable in today's world. Everything, the spillover effect. You may be in one country, and you may decide to watch the neighboring countries, but maybe it's also in the broader region that things are starting to get a bit uncomfortable, or there's issues could emerge. So it's always you need to be comprehensive, but you should not be should not then lose focus. So it's a bit of a fine balance to strike there. But I think that's something that each company needs to decide for itself. Of course, the idea here is really to make the risk transparent, to reduce the blind spots that you have, and to have a bit this view into the future, so to detect some of the emerging risks that you may not yet fully have on your agenda. As an example, of course, what we always looked at are elections. Where are elections going on over the next year? What are the important markets that we want to watch here? As an example from Europe, in Portugal, elections happened last Sunday. The socialist government was returned to office, so there'll be not so much change. It's going to continue as is. Some of you may not have heard that Portugal had elections. That's perfectly fine, because it may not be so important for you to watch that particular country. More people will already have heard that France is holding its presidential election this year in April, and followed by the parliamentary elections. And of course, this is of course a more important event for for the European Union, the future of the European Union, and the policies that are going to be enacted over the next year. So this is certainly an event that we would watch very closely. So second step, scan the horizon and then imagine the future. Actually, this is a bit, this is just the scenario, developing some of the scenarios that could be of relevance to your business. So what is likely to happen? I'm not going to go through all the steps here. So the issues, what are the issues that you see? Who are the actors? Who is on the playground? What do they want? What are their preferences? What resources do they have? What do they want, etc. And then, of course, a bit in what direction, what could be the future trajectory that we will observe. And you can also do this. You can also do this in a more, let's say, in a scenario. You can develop these scenarios in very different manners. I'm not going to go into details here. You can do it more traditionally, like kind of building from today into the future. You can try to apply other methods, such as the Shell Oxford scenarios approach, where you try to build back a bit. What could be the future look like? How could the future look like in 10 years' time? And what would that mean then when we think back to today? What are the trajectories that we will be on that lead us into these different futures? Doesn't really matter, but just important that you try to imagine a bit. How could the world look like? How could the situation in the markets that I'm particularly interested look like, so that you are also then prepared for different situations. Here an example also from UBS. You see here a bit the scenarios. Interestingly, 3 scenarios. This is from 30th August 2019. So before the US presidential elections of last year. So what happens with this US-China trade dispute? At the time was a big story. So different scenarios, different probabilities, likely path. What would it mean for the GDP estimation? What would be the response of the Fed with US recession risk? So basically, here we have a bit the scenarios, and on the other hand of the slide, you have more kind of the impact that what could it mean for different indicators, different economic indicators. And with this in mind, of course, a company like UBS, so a wealth manager, would then also try to think about what would that mean for our portfolios, for the portfolios of our clients. How do we need to reposition the asset allocation in the portfolios of our clients? Third step, then the vulnerability assessment. So basically, going back to this slide here again, understand the exposures. That's what we already talked about a bit before. So what would it mean for our assets, liabilities, operations, etc.? So this is just an this is just an example from my time at Swiss Re. We asked ourselves, well, could there be some social unrest following the COVID-19 pandemic? This was done in mid 2020. So we developed a couple of scenarios, then attached a stress factor to our portfolios, to our liabilities portfolio, so to speak, and then could gauge a bit, what could be the range of different loss scenarios. This, of course, the idea behind is then to see whether we can actually do something about it. Do we need to reposition a bit the portfolio? What are the options that we have? Are we concerned? First of all, you ask yourself, well, can we live with this type of loss? Is this a concern to us? And then you could also say, well, this is normal business. If this happens, that's fine. We are used to this. Or you could say, well, no, we need to make some changes to it. And then, of course, the fourth step kicks in. You can ask yourself, what can we do to hedge or mitigate some of the risks that we have identified? Of course, the most radical approach is always to avoid certain situations. You could say, well, this country is becoming too risky, so we are getting out of it. You could say, well, we're not going to work with this customer anymore. Reputation risk is too high, or sanctions risk is too high, whatever. You could also start selling some of your assets. There are a lot of options, but of course, from a commercial point of view, this is not what you want to do, because you want to do business, and without risk, there is no return. So this is only, let's say, this is a bit the radical approach. What you usually try to do is you try to reduce your exposure. You may adapt the market, your market offerings. You may change some of the contractual clauses. You may think about different financing agreements, prepayments instead of payments after you have delivered already your stuff, etc. So there are different steps that you can take. Of course, you can also try to influence policymakers if this is within your reach. Maybe in your own country, this is easier than abroad. But yeah, also here, different options to reduce the vulnerability of your business to the identified risks. Can also try to transfer risk. The easiest or the most obvious approach here is to buy insurance cover. You can transfer some of the risks that you have to your insurance partner. You can try to outsource certain activities. You could say, well, we're not going to do this ourselves anymore. We hire a third party that is maybe more used to work in this or in that particular market. You can also, for example, you could also say, well, we're gonna we're gonna bring our own staff out of a market. We just run it with external contractors, etc. So also here, you could try to transfer some of the risk, some of your risk positions to third parties that are more willing to accept that risk. Or of course, you can then accept it. Say, well, this is part of our business and business model, and we run the risk because we are confident that we can withstand the situation, even if it turns out to be a bit more challenging than we hope for. So summary, again, I'm not going to go into details here. Environment analysis, scenario development, vulnerability assessment, mitigation action plan. I think these are the steps that you need to take in thinking about the political situation and the potential impact on your business. Then the fifth element, so to speak, the last element, is always to ask yourself, do we have the right capabilities in place? Or do we have the people, and do we have the data and the information that is required to manage the situation so that we are comfortable? And larger companies sometimes hire in-house experts. They build up teams to build up the internal capabilities to discuss these topics internally, to make the link between the political analysis, the understanding of what's going on globally, with the internal people who are focused on the product, on the services, on the business model, on the strategy. So I think that's that, but that's usually the this is an approach that usually only large companies take. You can also always work with external consultants, and or you can hire in external consultants to establish the internal processes that then allow you to run the whole assessment yourself. So this is, I think that would be a bit my approach. This is what I wanted to propose for discussion to you today, and I'm now happy. I think we still have some time. For discussion. I've also put up some questions so that we can talk to each other, and you can also discuss amongst yourself, and then I'm keeping myself out a little bit, so that's also fine. But as I heard that you are coming from different industries, so maybe some of you can also share some of the experience that you have already made. And with this, I would like to thank you once again for having listened to me, and hand the word back to Ben.
Thank you so much, Dr. Habegger, and we really appreciate this thorough analysis of what companies need to look at as far as their risk analysis. And we have so many different diverse companies that are from small enterprises looking at investing in other nations to the large conglomerates here. But I also want to turn it over to Dr. Cheryl Cross and see if Dr. Cross, would you like to say anything before we jump into the main discussion?
Yes, Ben, thank you very much. That was an outstanding overview presentation. And I think that from an academic educational standpoint, I think you've really helped to emphasize the interconnection between the political world, the business world, and certainly what we've experienced here in the United States and in the global environment over the past couple of years. Definitely illustrates the importance of being proactive, of having the resources built to look at and assess the risk environment, geopolitical circumstances, national circumstances, environmental factors that can all impact the business environment. And I come at this more from the security studies community, but I think what you set forth is also relevant. I mean, 15 years ago, we were at the Marshall Center engaged in a simulated war circumstance where Russia invades Ukraine. And everybody thought that at that point in time, it was something that no one was expecting. We really didn't anticipate it, but it was more of an exercise of what would be done, capacity building, role for diplomacy, role for the use of force, et cetera. So this framework that you have obviously has application across various areas and certainly important. And we live in a very complex, interdependent world community today where developments in one part of the world definitely impact business environment everywhere, including our global investment in assets. So I think it was a very valuable and very well organized and conceived lecture, which we appreciate. And I know we could spend the next 2 hours talking about it, but I think there's a question in chat, and hopefully I would encourage students in our community of Austin and the World Affairs Council to take advantage of the opportunity to engage with you while you're here. And we also look forward to bringing you back to Austin when it's possible to be with us in person. And as you said in our meeting early on, this is a very dynamic, growing global business market here in the Austin community. And so the kinds of insights you bring and the work that you do is certainly of relevance to all of those who are working in that area here. So thank you for joining us, and welcome questions and discussion.
Thank you very much, Cheryl. Maybe just let me quickly say a word on the question that was put into the chat. That's a perfectly legitimate and also very interesting question. It's not a political risk question. The volcano eruption is basically
natural.
This is of course not able to, of course, not be in scope of what we do. But the basic approach from a purely risk management point of view, independent of the political angle that I put to the risk management to the risk management considerations, they of course still apply. So there are also different options that you would like to consider when you have all of a sudden a new risk factor that you may have been aware of it, but you may not have thought that this could be an issue for your business, and all of a sudden becomes an issue. Then of course you need to think about how can we actually hedge that risk? What can we do to protect ourselves? What can we do to protect our business against such a newly emerging risk that we may not have thought to be of relevance to us, and all of a sudden it actually is?
Thank you for that. I was actually wondering what your take would be on that. And you're totally correct. I know it's not covering on the politics side, that it is an environmental factor, right? And so there's no way for us to be able to really control that. So I was very curious what your take on that would be. So thank you.
You're welcome.
Dr. Habegger, thank you so much for just a very thorough and terrific presentation. Really appreciate all the points you highlighted in there. I have just one question for you for now, and that is the corruption. The corruption that exists in some of the developing countries and others as well. How would you really assess that? Assess it in terms of cost, insurance policies, and things like this?
Well, corruption has, of course, from a risk point of view, different angles that you need to look at. So first of all, corrupt practices, corrupt behavior is usually not legally allowed, right? The question always is whether it's being detected and whether it's actually whether the state in which you operate, and in the state in which you see corrupt practices, is actually able to reduce corrupt behavior, or whether this is not the case. So basically, but of course it can become a legal issue, and of course it can also become a very salient reputational issue. So when you decide to work with business partners, or when you start working in markets where you know that corrupt practices are widespread, then of course I would, from a risk management point of view, you need to consider very carefully whether and to what extent you want to actually involve yourself in these markets in certain industries that are potentially, some may be a bit more prone to corruption, some a bit less. But this is also then a consideration that you need to make very consciously, and decide what the risk appetite is that you may have to potentially be also be exposed to such practices. Yeah, sorry.
Like the consequences of corruption, for example, like if a company would lose their asset because of the fact that they did not follow a particular practice in that country, which involves corruption. I guess that could be really part of something else in terms of political risk insurance.
Yeah, insuring yourself against such an event is probably quite difficult. But yeah, I mean, I agree with you, of course. I mean, it's always need to be very careful. I mean, corruption is a very thorny issue. Is very
spread in many areas.
Yeah, and of course in many parts of this planet. I can also offer an additional thought if you want me to, also a bit in line with what Cheryl proposed before, the kind of the instructional. I have an additional slide somewhere. But I think what can be interesting also for you to consider is how do companies actually think about politics compared to people working or organizations working in academia or in government. Sometimes I get asked this question: what is different when you do political analysis and political exposure assessments in business compared to if you were doing this in let's say for a government? And my answer is the following one. And of course, you can then challenge me very, very strongly. So my understanding is the following. So in academia and in research, the question that you usually use is the why question. So you have usually a very strong empirical interest. You want to understand why something has happened, why actors have taken that particular decision, why events have unfolded in a particular way. This is the academic perspective. Then in governments or in think tanks or in NGOs, the question usually is, what should we do? So it's a much more normatively driven approach. You ask yourself, what can we do? What should we do? What do we need to do in order to achieve a specific goal? So this is what governments usually do. And when you work for an NGO, you want to achieve something, you want to change something, you want to achieve a certain policy goal, and this is the question that you usually ask. And in business is much more practical. In business, people are usually interested in what is likely to happen and how can we mitigate the effects, usually the negative effects on our business. So it's less normative. So there is no government, no business actually really wants to change government. Well, of course, sometimes you try to lobby the government for changing some policies, but it's very practical. You take it as a matter of fact that the situation changes around you, and then you try to give the right answer so that you are not, so that your commercial goals are not negatively impacted by the situations that occur around you. So I think this is a bit my thought model. So that's how I try to distinguish a bit the perspectives of business from the perspectives that are prevalent in academia and in, let's say, in governmental institutions. So that's just a side remark, basically.
And we had one final question in the chats regarding the pandemic.
So the question is meant to is meant in the way that some companies may not need to to travel anymore, or not need to be physically present anymore in certain ways, but can now outsource this to, let's say, technology. Is this the idea of the question? Then I would say, well, of course, if you may need to travel, let's say in a location or into a country where you have a certain security issues that come with being there, then this could be a beneficial outcome. But I do not think that this is and overall I don't really see here a significant change from this to let's say to the overall exposure situation of a company.
Well, thank you again, everyone, for joining us today, and we really appreciate the time, Dr. Habegger and Dr. Cheryl Cross, all of you, and we really had a very enlightening conversation today. I urge all of our attendees to keep an eye on the World Affairs Council of Austin's calendar of events. We have the upcoming Kozmetsky Forum for March will be on Tuesday, March the 1st, and that will feature the Consul General of the Republic of Georgia, as well as our Globalist series of informal discussions. The next Globalist discussion will take place on Thursday, February 17th at 6:30 p.m., and we hope to see you then. Well, on behalf of the World Affairs Council of Austin, thank you all for joining us, and Doctor, enjoy the snowy evening in Zurich.
Thank you very much. Have a good day. Thanks again. Bye-bye.
Thank you so much, Viet. Thank you.
Thank you. Thank you.